Christmas on the high street has been very much a case of winner takes it all. Sainsbury's today, like other big supermarkets, reported a rise in sales. Cash-strapped consumers seem to have spent what money they do have on food and drink. But some of the general retailers have seen a big drop in spending. Could this, as some say, be down to Brexit uncertainty? Or is there a more fundamental shift in shopping habits? Our economics correspondent, Helia Ebrahimi, has this report.
Christmas cheer brought a boost to Sainsbury's trading, with consumers spending a record amount on the Friday before the holiday. While shoppers forked out for mince pies at Sainsbury's, other parts of the high street haven't fared so well. But for the Sainsbury's boss, rising prices have actually helped push up the value of sales at a time when inflation is putting pressure on his customers.
Customers are seeing a squeeze on incomes because inflation is going up faster than their wages are going up. What happens in situations like that is people tend to defer the kind of big ticket purchases. Cars would be a very good example of the kind of thing that people don't have to buy today necessarily. They can defer to some point in the future. But of course within the food business it tends to work in our favour because people tend to eat out less and tend to eat in. So actually that has a beneficial effect on our grocery business.
The story of cash-strapped consumers has affected companies in different ways. And so far, it's been a tale of two high streets. Sainsbury's were toasting the success of their high-end food range, which saw sales bounce, while its discount rival, Lidl, saw sales jump 16%. And last week, Next surprised investors by posting better-than-expected online sales. But at Debenhams, which has struggled in recent years, things have been much harder. And Mothercare, another British brand facing heavy competition, said sales had faltered over Christmas. And Moss Bros, a company over 150 years old, has also been hit. Tougher economic times are exposing shops that are in trouble and those that have simply lost touch with their customers. As the famous American investor Warren Buffett once said, it's only when the tide goes out that you get to see who's actually swimming naked.
We know that lots of people are cash-strapped, but they are still spending.
For Mary Porters, who's seen trends come and go on the high street, the retail victims only have themselves to blame.
There is just so much great competition out there, and that's a really good thing for us as consumers, and we mustn't forget that unless these businesses are delivering and really delivering things that are going to enhance our lives and make our lives better, we're not going to go there.
Is it time up for the dinosaurs then?
Of course it's time up for the dinosaurs. And, you know, good.
This picture of winners and losers is complicated by Brexit worries, but for Miss Porters, that's not the key issue. So we shouldn't be bemoaning the death of the British High Street?
I don't know if it is the death of the British High Street. We are completely coming into a new phase. Retail today, if it's a business model that's not working, which the old business model isn't, it needs to be pulled out, the plug out of the wall and started again.
But while Mary Porter says shops like Sainsbury's have done a good job winning customers through their high-end food range, it hasn't all been good news. Hidden in the detail of the trading numbers, there's a less encouraging story of price inflation, cost-cutting and a focus away from general merchandise. So inflation at 3% at the moment, do you feel that's peaked?
I don't know exactly when it will peak, but as I say, I think if we were looking forward, all other things being equal, I would expect that inflation will gradually drop out over the next, let's say, 6 to 9 months in the food market.
That prediction will be good news for consumers and indeed the wider economy, but it may not be enough to save the shops Miss Porter sees as dinosaurs.